So the market and the economy in 2022 and beyond might get a little ugly. Let me explain why. Hey, what's up you guys? It's Rob here with another legendary video. Today's video, I'm going to discuss what everyone else has been discussing, and that is the upcoming crash in the stock market, economy, and the real estate market. And I'm going to talk if there's any truth to that. Additionally, I'm going to discuss how this can affect your wallet and how or what strategy I'm going to utilize to capitalize on this doom and gloom. But you know what else is gloomy? Is when you do not smash the like button. So do me a favor, just quickly, just smash the like button, comment, do all the things that will help me out, help me out with the YouTube algorithm, and we can reach more people. That being said, let's get straight to the video. All right, so Rich Dad, the author of Rich Dad, Poor Dad, one of my favorite books of all time, one of my favorite authors, Robert Kiyosaki, he's been saying that the end of the financial system, the end of the world, is going to happen starting next month. However, though, he's been saying the exact same thing at least since 2018. It's getting a little bit ridiculous at the moment. However, though, with recent data, there might be some truth to that.
Not the end of the world or the financial system,
but we might be seeing a possible pullback in the market. So in the month of October, we've seen inflation rise up to 6%. And in November, with most recent data, inflation rose up to 6.8%. And that's the highest we've seen that in the United States in almost 40 years. With an estimated that in December, inflation will rise up to at least 7%. If you don't know what inflation means, it pretty much means everything is getting expensive. And unfortunately, wages are not keeping up. The cause behind this is, yep, you guessed it, it's the Federal Reserve in 2020. They print out a whole bunch of money and put it out into the system last year, which just devalued the worth of our currency. So speaking of the Fed, the Federal Reserve's most handy-dandy tool to combat inflation is raising interest rates. However, though, that's where the dilemma comes in. In 2020, the Federal Reserve's chairman, Jay Powell, aka Jerome Powell, he mentioned that he would not raise interest rates until the economy was during pre-pandemic levels, jobs were flowing, like everything was good to go. However, when he mentioned that inflation wouldn't be a big issue and the Federal Reserve would be monitoring inflation. And then 2021 happened. And as with the numbers I just mentioned a little bit earlier, things have changed. So with inflation out of control, with people not working because we're going through the Great Resignation, whatever that means, and a variety of other factors. And rumors is that Jerome Powell and the Federal Reserve may have to increase interest rates much sooner than expected, even as soon as around summertime, springtime, 2022. And what does that mean? Well, that means there's going to be a ripple effect throughout the entire economy. So if the Federal Reserve, they do decide to raise interest rates, they have to be very cautious of how much they raise it by and like how soon, right? Because as we know, with higher interest rates, that means it costs more to borrow money. And vice versa, with low interest rates, that means it's cheaper to borrow money. That being said, when interest rates are too high, people are less likely to borrow money, aka take out a loan to go buy a car or purchase a house, or a business is less likely to take out a loan to be able to expand their business. With money not flowing, that means less money is going to these corporations, to these businesses, to wherever. And that just means like the money's just going to dry up. So that will cause people, like companies, to lay off their workers, be a little bit more conservative with their research and development and pushing out different products and such. And that also means that, well, that might affect our GDP. And once the GDP it shrinks like at least 2 quarters in a row, then you guess it, we get a full-blown recession. All right, so as you can see, it can get real ugly real quick, and our portfolios are definitely going to take a hit. I guess I'm not buying a G-Wagon anytime soon. However, though, there is ways to profit from this, which I will share with my wealth building strategies that I think down the line will benefit myself. And you can go ahead and use this as well. However, though, this is not financial advice. You definitely need to seek somebody in that space and not listen to a random YouTuber. So first and foremost, what I'm doing is I am holding cash on the side. I know a lot of people say that cash is trash, and people like Grant Cardone, who has way more money than me. However, though, when there is a economics or stock market crash, you want to have cash on the side to be able to buy assets on a discount. That being said, if there's a stock market crash, stocks that I'll be looking at are like big name stocks, including Apple, Microsoft, companies like American Express, Nike. The reason why I'm going after these big name companies because take for example Apple. They have a big war chest, meaning that they have a lot of money on the side. I believe it's $200 billion. If another company or a competitor that is not doing so hot during this economic downturn, and their stock is for cheap, Apple can then use that $200 billion to buy that company that will help out their operations. So yeah, I'm gonna be going after these big name companies. Another strategy that I will be utilizing that you guys might think this is crazy, and saying it out loud is kind of crazy, but I will probably go after real estate. Generally, you would rather buy real estate when interest rates are low. However, though, while real estates are at all-time highs and with these crazy numbers, I can't get the missus to buy off on buying a new property at the moment. However, though, if interest rates go up and people are not buying houses and somehow real estate prices go down, I might be able to convince the missus to go ahead and buy real estate at, I don't know, maybe like 4% interest rates and refi at a different time. So yeah, that'll be like another one of my strategies. I will use my Roth IRA to buy like index funds like VOO. VOO follows the S&P 500, the largest 500 companies in the U.S. Or I will be buying, or I'll be buying VT Sachs. VT Sachs is a mutual fund that follows the entire U.S. stock market. So when it's in a downturn, buy that and just ride the uptrend for the next decade or so. And additionally, I will just keep on buying the big name companies and cryptos and holding for the long term. It's been shown multiple times. It's like the best strategy is to buy buy assets and hold it for like a 10 to 20 year period. All right, so that pretty much sums up the doom and gloom for 2022 and beyond. Hopefully I didn't scare anyone. I'm actually pretty excited because that means a lot of assets will be on discount. That being said, we don't know what will happen, when it will happen. It can happen next year, or it can happen in 2023. We just don't know. The most valuable piece of content in this video, though, is don't panic. Or what you want to do is you want to buy these assets and hold them for a long period of time. You can go back to historicals, the S&P 500 and such, and just look at the returns if you would have bought it in the 1950s till now. You'd just be a multi-millionaire. Well, that being said, thank you guys for watching this video. Please don't forget to like, comment, do all the things. I will catch you guys next time. Peace.